Asia-Pacific is an enormous region with more than 20 countries. Here to discuss the insurance and reinsurance market outlooks for 2020 is Scott Ryrie, co-CEO for AM Best Asia-Pacific. Scott, thank you for speaking with us today.
Thanks, Meg. Thank you.
If we broke it up in regions, could we start with North Asia, and what are you seeing there?
Thanks. Well, there's a lot of activity across the whole region. Starting with North Asia, we've got the Chinese market, obviously, which is enormous. The economy is growing, and we're seeing an increasing number of insurance and reinsurance companies across both the life and P&C sectors starting up. And I think that market over the next years to come will certainly grow very, very strongly. Japan, obviously quite a dormant economy, and have had challenges. They've had several recent large typhoons, Jebi and Hagibis, big numbers for the insurance and reinsurance markets, and that's caused fluctuations in renewal rates, etc., across that part of the renewal, which is presenting challenges for the market because losses have been very large. If we move down to other activities in North Asia, we're now seeing what I'm calling an inversion in the market, global market, where instead of European and US markets buying into Asia, some of the Asian markets, particularly the Japanese, the Chinese, and the Koreans, are buying businesses in other parts of the world and expanding quite aggressively. So it's a very different situation, a very interesting situation at the moment.
What is driving that change?
Different countries have different reasons. The Japanese want growth, and they can't get it in Japan. So they're therefore seeking to grow outside by aggressively entering many, many markets, having sometimes joint ventures or starting subsidiaries in other markets.
Has that been a difficult process for companies to buy into different countries?
It can be difficult because it can be competitive. And obviously, buying a company or starting a company, you need a plan, and there's always a price involved. And it just depends on the price point as to what the success rate is. So yes, plenty of challenges in North Asia. If we move down to ASEAN, I think very different types of markets. We're seeing more developing markets and what I would call growth markets because they're underdeveloped, and it depends on which country as to how developed or otherwise they are. We're also seeing a development of the risk-based capital models for regulatory purposes in many of the countries, which is good because it's causing consolidation and should cause the companies in those markets to be really more fit and proper in terms of their scale and their planning going forward. We're also seeing very interesting things happening in two very emerging markets, being Cambodia and Myanmar. We've seen international life companies invest in both countries. We've seen the Japanese go in as well. And there's not much insurance there. There's a pretty poor population, but those companies obviously see a massive growth opportunity. I would say not in the short term, but in the medium to long term. But the names of those companies, famous names across the world, and not to be ignored. If we move heading south down to Australia, my home country, there's a couple of things happening there. Firstly, obviously a terrible drought, one of the worst on records. Lots of debates, is it climate change or otherwise? I don't know, but it's certainly a massive drought causing enormous problems. And as a result of that drought, we've seen huge bushfires. At one stage, a few weeks ago, across New South Wales and Queensland, we had a 1,000-kilometre bushfire front, almost joined up. And so the efforts to fight those fires have been incredible. So far, limited loss of life. There has been loss of property, but the challenge is not over. They're still ongoing as we speak right now. The other thing happening in Australia has been the Royal Commission. That's caused the market really in the life and P&C sectors to really readjust, also the banking sector, and those changes are ongoing. And the third point for Australia is we're getting some risks, particularly far north Queensland for cyclone, being virtually uninsurable because of premium rates. So there's talk in the local market now about creating some sort of a pool with the big insurers, with the government, and that's ongoing as we speak. But it is going to be necessary because people need to be able to buy insurance. We're seeing other types of pools occur, for instance, in the US, where we are now, and we need that sort of model in Australia because people can't go without coverage. And last but not least, New Zealand. Obviously, beautiful country, relatively small population, but with a big earthquake problem. And there's also insurability problems with earthquake, particularly for Wellington. Rates have gone up, insurers are not that keen to take on that risk. And again, the government is involved, insurers are involved, and some sort of solution is going to be necessary.
And what are you seeing in the retrocession market these days?
Well, we're coming up to, we're only weeks away from the year-end renewal, 31st December rather, and challenges. I think the retro market is hardening. There's been reduction in capacity. Some retro market players have withdrawn, and certainly I'm hearing from the brokers in the markets that the rates are going up. We've also seen recently a reduction in capacity from one of the local reinsurers in the area, in the region. Again, that'll have an effect on renewals. So before a market starts to go up, it needs to stop going down. I'm pretty sure it has stopped going down, and now we're seeing increases depending on the country we're talking about, the perils, the loss patterns, and how much retrocession the reinsurers need to buy.
Scott, thank you so much for speaking with us today.
Thanks, Meg. Thank you.
For AM Best TV, I'm Meg Green.